India's gross domestic product GDP is reckoned to have grown 8.7%, while the gross value added GVA rose 8.1% in 2021 to 2022, as per national income estimates released on Tuesday. Coming on the back of the sharp decline in economic activity due to the COVID-19 lockdowns in 2021, when GDP crashed 6.6% and GVA by 4.8%, the latest numbers show India is emerging out of the tunnel of pandemic-induced ooze. The overall GDP and GVA have indeed recovered from pre-pandemic levels, but only just by 1.5% and 2.9% respectively. Remember that growth had already been on a steady decline through 2019, 2020, even before the lockdowns of 2020, with GDP growing just 3.7%. The government's assertion that the data establish a full economic recovery is not entirely true. For one, it is not a V-shaped recovery with GVA from job-creating sectors (trade and hotels) still 11.3% below 2019-2020 low levels. This has kept the services sector as a whole in line with pre-COVID levels, not above, while GVA from industry is up 6.7% over 2019-2020. Another job creating sector, constructing, is up only 3.4%, while mining has grown a meager 1.9% over the 2-year period. Manufacturing lifted the industry GVA growing 9.3% from 2019-2020 levels. But there are cracks on that front. The January to March 2022 quarter recorded a 0.2% contraction year on year. Overall, GDP growth slipped to a 4-quarter low of 4.1% in quarter 4, down from 5.4% in quarter 3, evoking flashbacks of the 2019-20 slowdown and raising concerns about the trajectory going forward. With reluctant demand, supply chain and input cost ooze hurting manufacturing, agriculture that grew at a 5-quarter high of 4.1%, and public administration services whose growth dipped to 7.7% from 16.7% in quarter 3 lifted the quarter 4 numbers amid slower growth in services and mining over quarter 3 and a mild 2% uptick in construction. A recovery in investment demand helped by the government's capital spending is a silver lining, but the lingering concern is that consumption remains troubled, and unless it recovers, private investments will remain aloof, as will sustainable higher growth. Full stop.